Hey guys and girls, it's Nathan Birch here from B.Invested.com.au headquarters, and today I want to talk about a couple of things in the economy and some very big changes out there. And I want to touch briefly on something, not to scare people, I just want people to be very prepared because there's going to be some changes that I'm starting to see flow through, and I'll be the first one to call this as being something that will affect every single person living in this country and probably most of the people living around the world, just based on the economic situation of the economy and greater abroad. So today I'm going to talk about, I've got a few notes here just to keep things running quick for everyone, but I want to talk about the interest rates. I've been predicting interest rates each month for the last 5-6 years, and every month I've had it correct. So I predicted that would have a 0.25% cut coming this month. If not this month, it'd be next month, which we've seen. I also predict further cuts in the future. So with it, it's 1.5% is the official bank cash rate in Australia at the moment, which is the lowest it has ever been, and we're seeing similar sort of things that are coming through around the actual world. Have the banks passed on this 25 basis points reduction? Some banks have, some banks haven't, some banks have passed on bits and pieces of it, but whatever it is, it's still a head in the right direction from that perspective. A lot of people actually feel that that this is a good thing, which it is good, but if we look at interest rates and money in general, I actually think cash, like money, is garbage. It's worthless, and we'll touch on that point in a moment. If we look at, if you put $1,000 in a term deposit in 2000, you would have been able to buy probably about 1,600 paddle pops at 80 cents or whatever it is, just making up these numbers off the top of my head here, don't have a calculator, that you would have been able to buy about 1,600 paddle pops with your money. Now if we fast forward to now, you'd probably be able to buy 500 paddle pops. So it's the same amount of money, but the actual purchasing power is going to be less, and that's what a lot of people are seeing. And the question I ask you today is, do you feel poorer today than what you were 5 years ago, 10 years ago, 15 years ago? Because the value of your dollar is not buying what it used to buy. Will interest rates stay down at these low levels? We've never seen these levels beforehand. Will they stay at this level? Personally, where I see the interest rates going is to 0%. 0%. Yeah? People may not be able to fathom that, but if you go look around the world, you will see 0% interest rates. With it, why are we heading in this direction? The country, we had a mining boom which was producing stuff. We didn't go through the GFC. With the GFC, a lot of countries collapsed and had big issues. We were sort of protected from that. And I think there's going to be 3 countries which are going to be very protected. One is Switzerland, one is Sweden, and one is Australia. If we look at why Australia, and I keep talking about this out there, is that we're a young country and we're bringing people in, importing people in the country that are going to be working, they're going to be paying taxes, and they're going to be keeping the country afloat, as well as the fact that we need to be building stuff. So we need to be building housing and accommodation for these people. So there's a lot of things that are going to be boosting up our economy. We're not in a position like America. We don't have debt in our country. We've got a little bit of debt, but it's not a lot of debt that we actually hold. So looking at that perspective, I don't think we're going to get hit with any sort of big GFC style thing that's going to come and wipe us out. But I do see that there's going to be some pain out there, and with any pain there's always going to be opportunities. What sort of opportunities do I see that's out there? I see a lot of people in their mind think that saving money is a good thing, right? We just spoke beforehand about if you had $1,000, put in a term deposit, you could make some money on it, but you wouldn't be able to buy as many paddle pops today as what you could have 10 years ago, 15 years ago. And the fact is that the actual value of your dollar, things are getting inflated, and we do have the risk, if we go much lower with the interest rates, for hyperinflation and those sorts of things. It won't be, like Zimbabwe, but we could see high levels of inflation, which in turn the government would raise the interest rates. But the fact is that whenever there's a problem, if we go back to the GFC, when we saw in 2007, 2008, whenever the GFC came through, the RBA dropped the interest rates 3 consecutive months by 100 basis points, or 1% this month, 1% next month, 1% the month after. So if there ever is any sort of turmoil that's out there, what they will do is start printing money and getting people to spend that. You saw your old mate Kevin Rudd go out there and make it rain for everybody by giving away $1,000 or $900. But the fact is that that isn't a real solution. We've always had options to be able to do printing off money, but when we're down close to 0% interest rates, what else can we do to print money and get the economy started? So that's the questions I leave with you. The final note is, why would you, a lot of people feel and believe in their head that they should be saving money. That's how you're going to get ahead. What is important today is having debt attached to, and I know this might be a big mindset shift, you need to have debt attached to an asset which will be inflated, i.e. a property, with a cash flow coming in. So what I mean by this is, I was talking to my mum the other day. She bought a house and land package for 47 years ago for $13,000. If we look at the property now, it'd be worth over $1 million, and it's in Sydney. The property would rent, you'd get $13,000 in rent in 3 to 4 months. Your stamp duty for buying that property, if you were to purchase that property today, would be close to around the $50,000, whatever it would be. The cash flow from that today, you'd be able to wipe that debt out with nothing. We've seen these cycles in the economy happen over 20, 30, 40, 50 years, and things play out in the past. But what we're going to start seeing over the course of the next 5 years, 10 years, 15 years, and 20 years is those cycles coming around a lot quicker. So we'll see things grow up a lot quicker. People might laugh about it, but you could be getting paid an average wage today of $50,000, but in 10, 15 years, you could be getting paid $1 million a year. But what would that $1 million be able to do for you? Would you be able to get paid $1 million a year and not be able to eat because the cost of food or the cost of living or whatever has gone up so high? So the mindset behind the debt is good with a hardcore asset, i.e. a property. Let's just say you buy a property today for $200,000 and it rents out its neutral cash flow. If the economy did get inflated at that level, what you would find is that if people are getting paid $1 million a year, they could be paying 200 grand a year in rent. That future money, which is going to be worth nothing, would be paying off your debt in the future. So debt becomes irrelevant with inflation. When you have low interest rates, inflation will creep up and get us unknowingly. So if you think that this is all, Nathan's lost his mind and got marbles in his head that'll lose, go back and speak to someone that could be, your parents or your grandparents or whatever the case may be, and ask them how much they were getting paid 50 years ago, because they could have been getting paid $1,000, $1,500 a year, and you'd laugh at that if you weren't getting paid that per week. But the fact of it is that that's what they were getting paid, and that's what they were buying properties with, and that's how they're paying down their debt. If you look at it and you're smart, the smart people in these sort of environments will make money. The poor people and the people that will soon be poor will not be taking actions to protect themselves in economic changing cycles. So if you do need help in pushing yourself to the next level, protecting yourself, protecting your family, protecting your assets, or making a change, because when there's a wealth changeover, someone's got to collect it. People at B.Invested are the ones that are helping, that are being able to cash in on that wealth exchange. So if you need help in your portfolio, your financial position, you can email us at admin@binvested.com.au or call us at the head office on 1300 367 925. Have an awesome day.